If you're self-employed or a small business owner and you feel like your finances are all over the place, you are in the right place. This is the place to come if you are not sure where to start, because we're going to talk about the 4 easy steps to getting your money in your business organized. If you don't know me, hi, I'm Jamie Trull. I am a CPA and a former Fortune 500 finance director, and I also own my own small business. So I've done all of this myself, and I like to educate other business owners on how to get organized in their finances and become more profitable. So if that sounds good to you, I would love for you to like and subscribe. Now let's jump on into it. The first step in organizing your business finances is recognizing that you and your business are not the same. And yes, that's true, even if it's a side hustle or you're self-employed. Even if you don't have an LLC or an S corporation, you still need to start looking at your business as separate from you. Now, this does become even more important once you form an LLC, and that's because the legal protection of an LLC can actually be invalidated if you are commingling everything you're doing for your business with your personal finances as well. So if you're sometimes running your business through your personal credit card or your personal bank account, that can actually be an issue. And that's why the first step is to organize your accounts. Now, there are a couple steps to make sure that you're organizing your accounts correctly. First things first, you need to have a business bank account. That is key. And it should be a business type bank account, not just a separate personal bank account. The difference is that there are some regulatory things that matter for banks. And what you don't want to happen is to use your personal account for business and then have your bank shut your account down. Believe me, it has happened and you want nothing to do with that. So it's really important to make sure that you have a separate bank account that you have started, and the vast majority of transactions for your business are running through that account. Which leads me to point 2. Don't run anything personal through your business account. Sometimes we make mistakes. That's not a huge deal, but it's really important to get in the habit of making sure that your business account is where all of the money comes in and goes out of related to your business. Now, again, this is going to be even more important if you have an LLC or a corporation, then it becomes pretty mandatory. But even when you're self-employed, this is still really important, and it's going to make your life a heck of a lot easier come tax time too. Now, a lot of people ask me, what do I do with those expenses that are a little bit personal and a little bit business? So for example, any expenses related to your car. Maybe you sometimes drive it for your business and most of the time are driving it personally. Well, usually you're still going to fill up your gas using your personal credit card. And in most cases, you are going to then later on make sure that you can figure out how many miles you drove for business purposes. Alternatively, you can use actual expenses and figure out what percentage of the amount of time that you drive your car is spent on business purposes. So let's say in that case, if about 20% of the miles that you drive in your car are related to your business, well, then if you have maintenance expenses, gas expenses, etc., you're going to be able to take the full amount you paid and multiply it by that 20%. Now, we're not going to get into all the mileage rules here. Oftentimes it is better to take the mileage, meaning to take your miles driven times the standard mileage rate. But all this is to say, the important thing is that if you're splitting your costs, or maybe it's something like your cell phone or your home internet if you work from home, then it's okay for those things to be paid personally, and then for you to either reimburse yourself from your business for the business part, or to wait until tax time and make sure that you're including those things as deductions that you are giving to your tax accountant. And what I always tell people is it really will help you so much more than you think to get things set up from the beginning. Most business banking accounts are free. Now, sometimes they have minimums and various things like that that you need to be aware of, but in most cases, it's really easy to open up a business bank account. And I will tell you, spending that time to get it set up and get all of your money coming in and going out properly from that business bank account will save you so much time and energy trying to sort through everything later. If everything is contained through your business bank account, it will make tax time a breeze. Now, throughout this presentation, as I'm talking about ways to get organized, I love using tools. And so I'm going to recommend just a couple of my favorite tools that go along with what I'm talking about. So in this case, what I actually use for business banking is Relay. My favorite thing about Relay is it allows you to open up multiple different bank accounts under the same umbrella. It's literally the click of a button to open a whole new bank account. And you can transfer money for various different things. So if you want to do something like saving for taxes or having an emergency fund for your business, you can do that super easily with Relay. Plus, it has the option to have a couple of interest-bearing savings accounts, which is great because we do not want our idle money to just be sitting there not making anything for us. Plus, it also has some awesome team features, and there's even invoicing built right in. So it is really built with small business owners in mind. And with all of my favorite tools, I actually go to them directly and try to negotiate the best rate I can for you. So in this case, because Relay actually has a starter account that does not have a monthly fee, instead of a discount, I actually have negotiated a special bonus for those of you who sign up for a new Relay account. So you can get $100 right now, subject to change, of course, as always. But if you go to jamietrull.com/relay or use the QR code on your screen, you can sign up and get that extra special bonus, and you can get started getting organized today. This is honestly one of the best things you can do as it relates to organization in your business is just get started with a Relay account. Now, if Relay isn't right for you, or maybe you're looking for something a little bit different, you need a bank that has lots of brick and mortar locations, perhaps, then go check out jamietrull.com/banking for other recommendations that I have for you. All right, now on to step 2 of getting our finances organized as a small business owner. And that is organizing your books. Now, you've probably heard the term books. You may or may not know exactly what that means, and we're going to talk about that here in a minute. But this is really your bookkeeping, and that is your record of the money you made in your business and the money you spent in your business, as well as the things you owe and the things that you own. Now, it's important to say there are 2 key reports here. So if you don't have an accounting background, this may be news to you, or if you've been doing this for a while, you may already be well aware of this. But these are the 2 reports that every business owner pretty much should have. The first one is a profit and loss, or a P&L. You might also have heard of it called an income statement. So this is really your record of the sales that you made in your business, i.e. the revenue that came in and the money that went out to pay expenses. So this could be payroll, this could be software, pretty much any other expenses that you have in your business where money is going out the door. That's going to show up on your P&L. And the number that matters the most on your P&L actually isn't that revenue or sales number. It's your net profit number. And we're going to talk more about that a little bit later, but that's how much you actually have available to be able to pay yourself. Now, in general, that's also before taxes, unless you are a C corporation. So we'll talk a little bit more later about how to make sure that you're set up for taxes. Now, the second key report you are going to want to have, in most cases, there are some exceptions, which we'll talk about here in a minute, is a balance sheet. And a balance sheet is really what you own, that's an asset, and what you owe, which is a liability. Okay? So ultimately, if you own assets, that might be cash in the bank. That's easy to understand. That could be other things that you have. Maybe you have equipment, fixed assets that you purchase for your business, machinery that you're using for a long period of time. Well, in many cases, because of accounting rules, when you buy, say, a big piece of machinery that you expect to last for a long time, you usually don't count that as an expense directly on your profit and loss. Instead, that is an asset that goes to your balance sheet and over time will get what's called depreciated into your profit and loss. We're not going to talk about all of that here now. That's some tax mumbo jumbo, but just know that tax treatment can be different. Just because money goes out the door, it doesn't mean that you're going to get that expense deduction in the current year. Instead, it might be spread over multiple years. And that's why when you're thinking about making big decisions on purchases, it's a really, really good idea to talk to an accountant about it ahead of time. They can help make sure that you structure it exactly how you want it and what's going to be most beneficial for you. Now, in addition to assets, you're also going to have liabilities on your balance sheet. And liabilities largely are going to be things that you owe. For a small business, that might be some loans they've taken out. If you've taken out any short-term or long-term loans, or you have overdue credit cards, those would be showing as liabilities on your balance sheet. Now, if you're wondering why it's called a balance sheet, well, that's a great question. It's because it always has to balance. So in this case, how it balances is you take your assets, your total assets all added together, you subtract your total liabilities, and that's what gives you what your total equity is. And that's ultimately your ownership interest in this business. And that's the portion of the ownership interest that hasn't been distributed to you yet. So ultimately, the balance sheet should always be balancing, and your equity is kind of the difference between the two. Now, I recognize that I'm throwing a lot out here right now, especially if this isn't something you're already familiar with. And just know that I have other resources and programs to help you if you want to dive deeper into things like the reports that you need or understanding accounting at a more deep level. Now, note that there's also the cash flow statement, which honestly, most companies of small size don't necessarily need an official cash flow statement. These are really the two that are typically going to be most used and most important. And they're also going to be the ones that you need for taxes a lot of times, or if you're trying to get any kind of loan. So how exactly do we produce this? How do we keep our books organized and create these reports? Well, you really have a couple of options. The first option is really the easy way, right? Like this is the very simple way, and that is to use a spreadsheet, a Google Sheet, an Excel spreadsheet, Apple numbers, whatever you typically use, you can use a spreadsheet to track a lot of this. And that's oftentimes where people start early on in your business. If you maybe only have a couple of expenses and you don't have income coming in yet, that may be completely fine. But as your business grows, you're probably going to eventually want to upgrade into more of a fulsome accounting software. Now, in most cases, accounting softwares charge you on a monthly basis, so you are typically going to be signing up for a cloud-based subscription. Now, while there is that monthly cost associated with these software programs, oftentimes they do more than just your standard bookkeeping. They often will do tons of other things to help you run your business that can justify the cost. So let's compare and contrast these two options. Again, a spreadsheet is going to be lower cost. You may be able to buy it one time and use it for multiple years, and you avoid that monthly subscription cost. It's also going to be a lot more manual. You're usually going to be copying and pasting typically into this report. Now, again, that can be really good for super simple businesses or really early on in your business when you're trying to keep costs as low as possible. But a couple of important drawbacks to be aware of is that a spreadsheet typically is not going to provide you a balance sheet. And that is because in order to have a balance sheet, you need to actually be doing what accountants call double entry bookkeeping. And double entry bookkeeping essentially means that every single transaction has multiple impacts on your books, at least two. And when you're doing a spreadsheet, it's really more kind of single entry bookkeeping. So again, if you don't have assets or liabilities really that you need to be tracking for any purpose, then maybe a P&L is just fine and a spreadsheet might be completely fine. But if you do have assets outside of just cash, maybe you have fixed assets or possibly you have loans that you need to track, then it really probably won't work for you to use just a spreadsheet. And you're also not going to be able to get all the cool custom reporting and analytics that you can often get with some of these software programs. Now, with the software, like I said, there is typically going to be a monthly subscription fee. It's going to depend on which level you choose of the software and what you really need. Obviously, the more bells and whistles, the more you're going to pay, but it also has a lot more automation. It can connect directly with that business banking account and any credit cards you might be using for business, and it can pull everything in for you. A lot of times they can even auto categorize things so that you're not having to sit there and, spend hours categorizing transactions and figuring out where they need to go for tax purposes. It's also great because it can usually grow with you. You might be able to start on a lower plan, and then over time, as you need more things and as your business grows, you can upgrade and still have access to all of your past data. But on the negative side, there is more of a learning curve. This is something that is really important to know because a lot of people sign up for, say, QuickBooks and don't realize that you really got to understand what you're doing. There are about a million different ways to mess up an accounting software. That said, some are easier than others, but it is important to know that you're comfortable kind of getting into a software, understanding it, maybe watching some tutorial videos to make sure you know what you need to do, and potentially even eventually hiring a bookkeeper to help you. Now, if you're not sure what you need to use, what your needs truly are, and maybe which software program might be right for you, then I definitely recommend taking a quiz that I created just for you to help people decide what is best for them. These same software is not best for everyone, and for some people, like I said, a spreadsheet might be totally fine. So I've built this accounting quiz. If you go to jamietrull.com/accounting quiz, it's literally like a 60-second quiz. It's going to ask you some questions about your business and your needs, and then it's going to match you with the right solution based on your needs. So I highly recommend going and taking that when you have time. Now, like I said, I'm going to be spotlighting some of my favorite tools. However, this is not an exhaustive list. There are actually several different bookkeeping platforms that I really like. And so again, it's really important to go take that quiz and see what matches you. However, for me and my business, we've now moved fully over to Xero. And that was kind of crazy to me because I have been a QuickBooks user for years and years, and I've talked about QuickBooks. However, I have found that I really think Xero is a great alternative, and in a lot of ways, it's easier to use. And there are a couple of features that in QuickBooks you have to pay for a higher version of that you get even in the lowest version of Xero. So things like having unlimited seats, where as many people as you want to have access to your QuickBooks file, your accountant, any other team members, you get that even from the lowest package. And you also get access to my favorite feature in all levels as well, which is tracking categories. So my business has a couple different divisions. We like to see data in a few different ways, and Xero allows you to set up tracking categories and track your data in those multiple different ways, even at the lowest package. And like I said, I love to negotiate special deals just for you. So we have a killer deal on Xero. You have to go to the website to see what it is. It's a secret deal. So just go to jamietrull.com/Xero to see it, or use the QR code on your screen. And like I said, you can also go and take the accounting quiz. If you're not sure if Xero is the right fit for you, it's going to tell you what the right fit is. So go to jamietrull.com/accounting quiz. Now we're on to step 3. We are halfway through already. You're doing a great job. The third step in getting organized is getting your tax documentation organized. Now, you may think that's the same as your bookkeeping, but there are actually some differences we're going to talk about here. And the IRS can audit you for up to 6 years. Now, 3 is more common, but it really can happen for up to 6 years. So don't just think you're in the clear because you haven't heard anything. Remember, you need to keep that documentation and document it well. Your future self will thank you. Now, personally, I'm really big on systems, and those don't have to be complicated systems, but you just want some kind of system that helps you keep up with a few things for taxes. So first and foremost, receipts. Make sure you have a way of capturing receipts. Now, the question of whether you need a receipt for everything, not necessarily, right? Some things it may be very clear what the business purpose is, but for other things where it might not be clear, for example, you go to Target and you buy some printer paper, right? Well, if the IRS comes knocking, they don't know that you bought printer paper. If you no longer have the receipt and purchase something at Target, well, the IRS auditing you has no idea what you actually bought. Maybe you bought shampoo. They don't know. And so they may disallow it, which leads me to the second part of this. You want to also have deduction documentation. Receipts aren't enough, right? There are lots of things. You could have a receipt for Starbucks, but they need to know that you had Starbucks while meeting with a potential client on a certain day, and here's what you talked about, right? You need to get that detailed. You can write it on the receipt and take a picture of it, put it in your accounting system. You can just have a file folder on your computer for your tax documentation. It doesn't have to be fancy, but you do need to have some type of system that you're actually keeping up with to keep this stuff. Hopefully you'll never need it. Most of the time you won't, to be honest. And this is one of those things where people get away with a lot. You might say, well, so-and-so deducted this and it was fine. Or they said I could do this and it wasn't a problem for them. Well, it doesn't mean it wouldn't be a problem for you. So be careful taking tax advice from people who are not tax accountants. Don't forget to document your future self. Once again, we're always thinking about our future self here. Your future self will thank you. Now, when talking about taxes and documenting, especially things that you want to deduct as expenses, the question I get a lot is what's actually deductible? And it's a really hard question to answer. Unfortunately, the IRS does not have an exhaustive list of what is and isn't deductible. They do have a lot of examples out there, but again, it's really going to depend in a lot of circumstances. So ultimately, the way that the IRS defines it is that an expense should be ordinary and necessary. But it's key to understand exactly what those words mean in IRS speak. Ordinary is an expense that is common to your industry. So somebody else in the same industry would probably have a very similar cost that they're deducting. And this is the one that gets me all the time because to me, when I hear the word necessary, it means needed, right? Like I have to have it. I couldn't run my business without it. And there's really very few things that I actually couldn't run my business without. So that would almost seem like I can't deduct anything. But no, the IRS decided to just completely change up what the definition is of necessary. And so in their minds, and as it relates to deductions, necessary just means an expense that is helpful and appropriate for your trade or business. So that lowers the bar way down from what you probably originally thought when you heard the word necessary. And here's the kicker. The exact same expense could be deductible for one business and not for another. And that's super frustrating and really inconsistent, right? But that's just how it is. And sometimes what matters is who you get as an IRS auditor. But a lot of times what's going to make the biggest difference if you are ever audited and there's something that's kind of on the fence, like maybe it's in the gray area, that's where the documentation comes in. Who, what, why, and where. When in doubt, put more than you think you need. For example, if you're going to a conference, maybe it's a personal development conference and you're like, should I be able to deduct this? That's one of those areas that may come down to how you document it. Take the outline. What is the agenda? Talk about how you're going to use some of that in your business. Jot down some notes and keep it in a folder somewhere with your other tax documentation. Things like that can go a long way to really show that you're using something for business. The IRS is really on the lookout for small business owners using personal deductions as business deductions. That's going to be one of the biggest things that they are looking for when they come a-knocking. So just make sure you have your ducks in a row. Now, I know that I already spotlighted Xero, but I wanted to bring it back up here because it's also really great for things like this. It's going to help you keep your books in order, but then you can utilize those books come tax time. And it's going to give you lots of information about your business all year round, not just at tax time. That's one of the issues that I find is that a lot of times people wait until the very end of the year to get their finances together, to start combing through everything. But at that point, you've really missed the opportunity to be able to use that data in your business to make more money. And to me, that's really the bigger purpose of really getting a hold of our finances. It's not just taxes. Yeah, taxes are well and great. We have to do our taxes. But what we really want to do is be able to make more money and track our profitability and keep tweaking things to get better. And if you wait until the end of the year to put everything together, you may have missed months of opportunities to make small adjustments in your business that could have made a really big difference. And that's why I love software like Xero, because it has lots of features that help you analyze your business performance and help you make decisions better in your business. All right, now moving on. The fourth step in organizing our business finances. And this is the fun one, y'all. This is the exciting one. Organizing your profit. Remember, we want to be profitable. We do not want to fall into the trap of becoming less profitable so that we pay less in taxes. My friend, that ain't the way to do it. Remember, your profit left after, revenue minus expenses, your profit left, that's essentially your paycheck. That's how much you can actually pay yourself before taxes. Don't squander it. Don't spend money in your business just so that you have less profit, because ultimately you're hurting yourselves. Don't spend extra money in your business that actually isn't providing a return on investment just so that you have less profit and pay less in taxes. You wouldn't take a job from somebody else that was lower paying just to pay less in taxes. No, so don't do it to yourself in your business either. And this is another area where we can really do our future self a solid. We want to use yesterday's money, not tomorrow's. That means we're putting the money that we already made to work for us towards our goals and the things that are important to us, and therefore not having to borrow from future us in the form of debt in order to pay our bills. That's just saddling future you with the need to pay those bills plus interest. But how exactly do we do that? It all sounds well and good, but practically what do we need to do? Well, that's where I created my proprietary method called profit planning. So you're going to want to create a profit plan. And what a profit plan actually does is give every dollar of profit in your business a job. And what job each dollar gets is really going to depend on what your goals are and what you really care about. Now, you may have figured out that profit is an acronym, and it also has two F's, which we're going to get to here in a minute because I promise I do know how to spell, but this is actually what I recommend you do and how you can split up the profit in your business to make sure that it's working for you. So first and foremost, you want to pay yourself. The P stands for pay yourself. It is really important that we pay ourselves from our business. Remember, our business and our person are separate. We've put them in two distinct buckets. So if we want to get money out of our business, we need to actually transfer that money to ourselves. That is paying yourself. Typically, that's going to be in the form of owner's draws. If you are a corporation, you might also pay yourself a salary, but in most cases, you're going to be taking most of the money out of your business in the form of an owner draw. And for those of you who are nerdy and you remember the balance sheet conversation, an owner draw is what's going to reduce the amount of equity in your business. But of course, our balance sheet needs to balance, so our asset for cash is also going to be reduced. And paying yourself is critically important. You would not work for anyone else for free. Do not work for yourself for free either. If you're past maybe the first couple of months of getting your business up and running, in most cases, you should be paying yourself. Do not fall into the trap of thinking you need to wait 5 years of building a business to pay yourself. I paid myself by month 3 of my business, and I will continue to do that forever because I'm working so that I make money. That is not a bad thing. All right, now the R in profit is for rainy day. This is essentially your business emergency fund. This is putting money aside each and every month to make sure that if you have an emergency in your business, whatever that may look like for you, that you have some money set aside to be able to handle that without having to go into debt. This is where we start putting things on credit cards. But if you have a pocket of money set aside that is for dealing with things that come up that you didn't expect, well, now you are in a much better position and you don't have to steal from future you. Now, the other thing that you're going to want to put money towards each and every month when you're apportioning out your profit in your business is an opportunity fund. And that is really for reinvesting back into your business, but not your normal expenses that you typically have for your business. This is for above and beyond. This is for when you want to really grow. Maybe try something new or hire a contractor. Maybe you want to have their first couple of months of their pay put into an opportunity fund so that you have time for them to get up and running and to see the return on investment. An opportunity fund is great for educational programs, anything you might want to learn, things like that, where you can take advantage of opportunities that come your way, again, without having to get out the credit card. Just continue to put money towards this opportunity fund and you'll always know whether you can afford something. That's the question I get all the time for people wondering what they can afford in their business. And I just tell them, if it's something out of the normal course and you want to do it, do you have enough money in your opportunity fund? If not, maybe you pass on it and wait for the next opportunity. There always will be one. And if you do have enough, well, you know, without shame or guilt, you can spend that money. That is what it's there for. So make sure to be putting money aside to do some intentional reinvestment in your business. Now, we're going to get to exactly how much to put in these buckets here in a minute, because that's really going to depend on your specific goals. All right, next is the future category. This may be putting money into, say, a 401k, or maybe this is paying off debt. If you are in debt currently, either business debt or personal debt, right? If you want to set a goal to make extra money in your business that's going to go towards paying down your debt faster, well, that is what you could put into the future fund as well. So if there's something specific that is important to you for your future fund, that's where you're going to put it. And if you're trying, again, to decide how much to put towards your future fund, well, it's going to depend on your goals. Let's say you want to retire in 2 years, you might be stockpiling into that future fund. But if you're 22 and you're not really too worried about it right now, and you really want to be able to grow your business, maybe you put a little more into your opportunity fund and a little less into your future fund. Again, you can customize this. There are not standard percentages. I will give you some suggestions to start with on the next couple of slides, but I want you to build something that is uniquely yours and is built for your stage in life, and know that it can change. I've changed my profit plan half a dozen times because my life has changed a lot in 7 years, and that is okay. So just give yourself permission to start with something and then modify it as you go along. Now, this right here is why profit has 2 Fs. I originally did it without the second F, and it just felt like it was missing something. This was key for me. When I added the fun fund, this was big. My family started caring a lot more about what my business was doing. I started getting more excited. I definitely make more money as a business simply because of this fun fund. It just really gets me excited, and it's a really tangible thing, right? Saving for the future is great. I love doing it. I'm a CPA. That's part of my DNA, right? However, it doesn't get me super excited on any specific day, right? The fun fund does. When I have literally a picture of something that I'm going for, that I'm working towards, it really makes all the difference. I highly, highly recommend you put at least a little bit of money aside from all the money that you make in your business for fun. And I recognize I might be the only CPA in the world that tells you that. And really similarly, I also have the impact fund. And the impact fund is really all about making a bigger difference in the world at large. Maybe that's giving to nonprofits, right? My business, for example, gives 10% of our profits to causes that we care about and align with our values. You can check out our website if you're curious to know more about that. Now, you don't have to start at 10%. Maybe it's 1% going to causes that you care about. But again, this can be a huge motivating factor. Or maybe this could be a fund that you put money in to allow you to have more time freedom to volunteer. Whatever it is, I really recommend having some money put into the impact fund. Maybe you can offer scholarships with money that gets put into the impact fund, right? It can allow you to be a little bit more flexible in the things that you offer. And I also feel like having an impact fund really helps me to feel more connected to the bigger purpose of my business, right? On those days where you're wondering, why in the world am I dealing with all of this? Everything's falling apart. Being a business owner is hard. It ain't easy. Nobody said it was. But when you can connect to something a little bit bigger than yourself and even bigger than your business, when you can connect to a mission, that can make all the difference. So again, I highly recommend even just starting with 1% and seeing how it goes. You probably won't even miss it. And now, after all of that great inspirational talk about having fun and making an impact, oh yeah, there's this too. We got to pay our taxes. I know. But that's how it goes as a small business owner. In most cases, you're not going to have your tax withholdings taken out of your paycheck. Now, maybe if you're a corporation, you may have some of the taxes you owe taken out. But in most cases, if you're paying yourself mainly with owner draws, well, that means that you're then responsible for making sure that you are setting aside money and remitting it to the US government and potentially to your state, depending on your local state income tax. So we simply can't forget about taxes. This is often the biggest thing where people think that they're paying way too much in taxes. It may not be that you're paying too much in taxes. It may be that you just need a better organization system to ensure you're putting money aside for taxes. I love talking about ways to save on taxes. I have lots of things on my channel that talk about different strategies, but the very first thing to do to prevent big tax surprises is to be saving year-round and preferably putting money into a separate account. Because let's be honest, it can be really hard not to touch money when it's just sitting right there. Now, I'm going to walk through a quick example of how this could look. So I want you to think about what your total revenue is minus your recurring expenses, your normal monthly expenses. That's what I consider to be your base profit. So let's say in this case, you have $15,000 of revenue, $5,000 of monthly cost. You have a net profit of $10,000. How can we input this into the profit plan to make it work? All right, well, here is an example. This is for those of you who might be in a high growth phase of your business. You're trying to grow quickly, right? Maybe paying yourself is a little bit less of a priority. You're not really all that worried about future, and you really just want to grow. Well, in that case, I start by putting the highest percentage in the opportunity fund. Remember, the opportunity fund is where you put money that you want to use to intentionally grow your business, to reinvest back into your business. Again, could be ads, could be hiring, whatever it is that you want to do. If you want to grow really fast, right, there is a trade-off. That means more money going back into your business and less money going to other things. So you can see that trade-off here, right? We're going to have maybe 40% going to paying ourselves, a couple percent into the rainy day fund, and so on. Now, of course, the taxes is always a difficult one. I do recommend typically working with your CPA to determine what a good tax percentage to set aside is. And I typically go a little bit above what I think I will actually owe. I'll usually use last year to estimate it out, and then I will probably save an extra couple of percentage points just in case, especially if I expect to make more this year. And if you're in like a high state tax income type of place like California, New York, you might want to be on a higher end, maybe closer to 35 or 40%. But if you're in a no state income tax area like I am in Tennessee, you might be on the lower end. And similarly, the more money you make, the more profit you make, the higher your tax rate is likely to be. So if you're making $20,000, $30,000, $40,000 in profit, you may be able to go with a lower tax percentage, maybe 15%, versus somebody who's making $700,000, $800,000 in net profit. They're probably going to need to go on the higher side. Let's say, though, that you aren't really interested in growing really fast. You need money now to pay your bills. You got to pay your mortgage. Maybe you're trying to get to the point where you can quit your day job and just focus on your business. And in that case, you really want to be maximizing your current pay. And you'll notice that I bumped up the pay yourself by about 20%. A lot of that came from the opportunity fund. Now I've taken that down to just 5%. So the point of this is just to show you there's a little bit of a trade-off. You have to determine what your specific goals are, and that might change over time, and that's totally okay. Build a profit plan, start somewhere, and then you can tweak as you go along. You are not married to it for the rest of your life, thankfully. Now, if you're wondering how the heck do I make this happen? Well, I'm going back to Relay. I know I mentioned this when we were talking about getting your accounts organized and opening up a business banking account. Well, Relay has the ability built in to open up multiple different pockets that are actually separate bank accounts that you can utilize for all of these different things. So I have one for each of my profit planning accounts. I have a separate account for each of them. And in fact, I'm actually even able to automate those transfers. Every week on Monday, it's going to take the amount of money that's in my operating account, which is my main account, and apportion it based on the percentages that I set into all the other accounts. Now, I could also do this manually, and I've done that in the past, but I love automations and it makes life so much easier. So when it comes to profit planning, there is honestly nothing better out there than Relay. I highly recommend signing up for an account. Again, you can get started with an account that has no account fee. So it's super easy to just go ahead and apply for an account and get started. And of course, make sure you use my link for that extra $100 bonus if you do. All right, quick recap on where we have been. Step 1 is all about organizing your accounts. Get that business banking account up. Make sure you're separating business and personal. That's got to be first every time. Second is organizing your books. Maybe get set up on a software or onto a P&L template, but you want some way to be tracking what's happening in your business. And you need to make sure that you are actually keeping up with this as best you can. Don't let months and months go by. And if you do, just get right back to it and make sure that you stay on track. Now, importantly, if you started with step 2 before doing step 1, you would be pretty mad at yourself. You do not want to set up a bookkeeping software and bring in a bunch of accounts that are mixed personal and business use. It will make your life crazy, and you will spend all your time just sitting in your accounting software and designating what's personal expenses. So again, make sure you have separated it and then just bring in those business accounts. 3 is organizing your tax documentation. And this is more than what's showing up in your software. This is adding descriptions. This is making sure you're tracking your receipts. Again, your software may be able to help with that depending on which one you use, but ultimately, even if it's just on a folder on your computer, the key is to document the business purpose of especially those expenses where it isn't clear. This is to help you just in case you ever get audited down the line. And step 4, and my favorite step, to be honest, because this is where we actually get to pay ourselves, is to organize our profit. This is where we use the money in our business intentionally. We have a plan for every single dollar, and that plan aligns with what is most important to us. That is the best way to prevent ourselves from actually spending money that we don't need to spend and reducing how much we can actually bring into our regular lives and make change with it. Now, here in this presentation, we've talked a lot about organizing your finances, and that really is the first step on your profit path. That's the first milestone, but it's not the only milestone to really having a financially fit business that pays you well. So I actually have a profit path diagnostic. This is a quiz that you will take for about 2 minutes. It's very, very quick, but it tells us information about your business, and then it helps to generate a diagnostic report that you can take and put into action immediately. And that diagnostic is going to be specific to your business. It's going to recommend the specific tools I think would be best for you, the extra learnings, and where you need to start on your financial fitness journey. So definitely go take our free profit path diagnostic and walk away with lots of great information. It gives you a full PDF report that tells you all about the things that you can do to get on the right track financially and stay on the right track. So real quick, just to sum up, here are a few key takeaways from today. Getting organized is not just about getting organized for taxes. That's compliance. That's all well and good. We need to do that. But what we really need are the insights into our business to be able to look at our profit and loss on a monthly basis and understand where we might be able to improve. That is really the key to staying organized. And that's why it's important to stay organized all year long and not just at tax time. We've all been there. We've all done it. Like I said, you and your business are not the same thing. And that's true across the board, but it is really true legally when you are an LLC or a corporation. So don't treat yourself that way. Think of it siloed and separate. Again, even if you're doing a side hustle, start it the right way from the beginning. It's going to make it so much easier as you grow. And like I said, spending time to get things set up right from the get-go will save your life. You will be so glad you did. Future you will be cheersing you when things are so much easier and organized, and they don't have to spend thousands of hours at tax time trying to pour through records and figure out what to give their accountant. And make sure you set up a profit plan. This is one of the best things you can do in your business. This changed literally everything for my business. And it really gave me a connection to my business and the money in my business that I didn't have before, and a sense of control. So make sure you set up that profit plan as well. Now, if you're curious where to get that profit plan, I have a free template for you. You could go download it now. You can see the link on screen. And a few other things that you can do are check out my website. I have lots and lots of different resources based on where you are in your journey, both free and paid resources. So go check it out and see how I can help you get on the track to organization and becoming more profitable and saving on taxes. You can also grab my book. It's called Hidden Profit. You can get it pretty much anywhere books are sold: Barnes & Noble, Amazon, bookshop.org, wherever you buy your books. I would love for you to get it. It's going to go more in depth on a lot of the things that we simply just touched on today, but hopefully in a way that makes it interesting and engaging. And of course, make sure that you subscribe to this channel. If you're watching this on YouTube, I would love it. It's basically like giving me a big hug after an hour of talking about finances. And you can find lots of other great free information right here on this channel being released every single week. And I would love for you to join me. Thank you so much for being here. I so appreciate you, and best of luck in all things money and getting organized.